What if the difference between retiring comfortably and struggling in your later years came down to one small decision you make today? Not a lottery win, not a six-figure salary, not a trust fund or elite degree, just one consistent choice. Most people assume wealth is built through massive breakthroughs, a big business exit, a lucky investment, or some genius financial move. But the truth is far less dramatic. Real wealth is usually built quietly, almost invisibly, through small, repeatable actions. My name is Thomas, and I help people understand how simple financial habits can create extraordinary long-term outcomes. If you're serious about building lasting wealth without chasing hype or gambling on risky shortcuts, consider subscribing. What I'm about to share could genuinely change your financial trajectory. Let's start with something uncomfortable. A large percentage of people cannot cover a $1,000 emergency without borrowing money or going into debt. That means a minor car repair, a medical bill, or a broken appliance can trigger financial stress overnight. And this isn't limited to people with low incomes. Many individuals with decent jobs, college degrees, and what appears to be a stable middle-class lifestyle are still living month to month. On the surface, everything looks fine. Nice car, updated phone, weekend outings. But behind the scenes, no real financial cushion, no real wealth, just income flowing in and flowing right back out. It's a cycle. Earn, spend, repeat. So how do you break it? What if the solution wasn't dramatic at all? What if it started with just $100 per month? That amount sounds small, almost insignificant, but over time, it can completely reshape your future. When people think about building wealth, they picture stock traders shouting across trading floors, tech founders selling companies for millions, or real estate investors flipping properties for massive profits. Those stories dominate headlines, but they're rare. The real engine behind long-term wealth is much less exciting. It's consistency, it's patience, it's time, and it's compound growth. If you saved and invested just $100 every single month, you would already be ahead of a majority of people financially. Not because $100 is a huge amount, but because most people never commit to saving consistently at all. Think about where $100 typically goes: a few dinners out, unused subscriptions, impulse purchases, random spending that disappears without a second thought. The issue isn't whether you have $100 somewhere in your budget. The real question is whether you're willing to redirect it from short-term pleasure to long-term freedom. Now, some people will say $100 won't make a difference. Others will say, I can't even find $100. Both perspectives miss the bigger picture. There's a powerful concept at work here: compound growth. Imagine investing $100 every month and earning a reasonable long-term average return. After 10 years, you wouldn't just have $12,000 saved. With growth, that amount could be closer to $18,000. At first glance, that extra gain might not seem life-changing, but here's what most people overlook: compounding accelerates over time. Stretch that same habit across a 40-year career. You would contribute $48,000 out of pocket, but your total portfolio could grow to over $350,000, potentially much more depending on returns. That means the majority of the money didn't come from your labor. It came from your money working on your behalf. That's the difference between trading time for income and building assets that generate income. In the early years, growth feels slow. A 10% return on $5,000 isn't exciting, but when your balance grows to $50,000, that same percentage becomes $5,000 in a year. At $100,000, it becomes $10,000. At $300,000, it becomes $30,000. The percentage stays the same. The impact multiplies.
This is why starting early matters so much. Waiting 10 years doesn't just mean missing contributions, it means losing 10 full years of compounding on every dollar. But here's the truth most people struggle with. The math isn't the hard part. Discipline is. Every month, you'll face a choice. Spend the $100 or invest it. There will always be something tempting, a trip, a sale, an upgrade, a "you deserve this" moment. That's why automation is powerful. Set it up so the money moves automatically. Treat your investments like a non-negotiable bill, one that's paid to your future self. Over time, something interesting happens psychologically. Watching your account grow becomes rewarding. You start checking it not with fear, but with excitement. You begin seeing money differently, not as something to consume, but as something to multiply. You may even find yourself increasing contributions. Raises get partially invested. Tax refunds get redirected. Side income gets funneled into assets instead of lifestyle upgrades. That's when momentum builds. Instead of asking, "Can I afford this?" you start asking, "What will this cost me in future growth?" $100 purchase today could mean hundreds, even thousands less in long-term wealth. When you truly understand compounding, you realize your greatest financial asset isn't your job or your possessions, it's time. And every month you delay is growth you can never get back. The beauty of starting with $100 is that it's realistic. It proves that wealth building isn't reserved for the elite. It's built through habit. As your income increases, your investments can scale. But even if you never increase beyond $100 per month, you'll still build something meaningful. This strategy isn't flashy. It won't make you rich next year. But over decades, it can quietly create financial independence. And beyond the numbers, something else changes. When you build savings and investments, you gain options. You can change careers, start a business, take calculated risks, invest in yourself. Capital creates opportunity, and opportunity creates more capital. The goal isn't just the $100, it's becoming the type of person who consistently invests in their future. Most people wait for the right time. A bonus, a big check, a perfect market. But the right time is rarely obvious. The best time to start was years ago. The second best time is today. One small, consistent decision, repeated month after month, can completely change where you end up decades from now. So the real question is this: will you keep spending by default, or will you start building intentionally? Your future self is waiting on the choice you make today. Take the first step.